In this podcast, I'm going to be discussing the very important topic of bank bail-ins. Interestingly, I'm going to link my kickboxing training and apply that to the bank bail-in discussion and show you how the bank bail-ins are nothing more than a fake. I'll also explain to you the importance of strategic thinking and how strategic thinking has led me to believe that there will not be a bank bail-in in Australia. Welcome back, business crew. At this stage, you should know that my name is Peter Solanikow. I'm a business consultant, coach and mentor. I'm based here in Melbourne, Australia. A very important topic which I wanted to discuss, and I'm going to put an interesting spin on it, and I'm going to come to a conclusion which I hope you will agree with me after you hear all my arguments. The topic is bank bail-ins. For those who might have heard the term but aren't quite sure what it is, a bail-in is a form of assistance. It's very similar to a bailout, except bailout is assistance from the outside. When a company becomes insolvent and requires assistance in the form of a liquidity injection, it usually does this through an external source of funds. And in these cases, they're called bailouts. Now, a bail-in is applicable to banks rather than most other organizations because banks actually have an internal source of funds, and these are the funds of the depositors. The argument here is that these funds can be used to assist the bank in gaining back some liquidity is because, in theory, the customers are creditors to the bank. They're an unconventional form of a creditor, but a creditor nevertheless, because we are, as customers of a bank, providing the bank with money, and then the bank pays us an interest for that money. So effectively we are, in this case, lending money to the bank. Now that's the theory behind it. In practically all situations, there is a cost for doing so, and this cost is interest. Interest is the cost of money. So when I lend money to you, in a commercial transaction, you will then pay me a certain amount of interest. Now, yes, it's true we can certainly negotiate that interest, but there will be some interest paid. Generally, the interest is going to be a reflection of the creditworthiness of the other party, which is why borrowers who are high risk because they don't have stable income, or they have no documentation which proves their income, or they have already considerable debt, then the amount of interest that they are then forced to pay is going to be higher than somebody who is of a much better credit rating. Now, in order to be able to decide on the level of interest, you then have to make an assessment of somebody's credit worthiness. Now, if we as bank depositors are to be considered as lenders, where we are lending our money to the bank, and so we are risking our capital in case the bank does fall, well, firstly, we need to be paid a certain amount of interest. We increasingly do not get paid interest because there are an increasing number of accounts which pay absolutely no interest, but you are compensated because you don't have to pay high bank fees, or bank fees which are as high as on other accounts. And secondly, we have never been given the opportunity as so-called potential lenders to the bank of making an assessment of the credit worthiness of the bank. So there's just the evidence is just not there that we should be considered to be lenders of the bank. We can argue, well, I certainly can argue that bank depositors more often than not actually don't get any interest. Now, in the past, practically every bank depositor in practically every type of account would have received some kind of interest on those accounts. The banking sector has evolved. The banking sector has obviously been working on various ways to increase their profitability, and so the banking products and services which are available today are quite different to what they were in the past, and sometimes we are actually better off not receiving any interest at all rather than incurring certain fees. Historically, bank services were very primitive, and so depositors would provide the bank the money, and then the bank would then provide interest and then invest that money. Now, over time, as services became more complicated, as there was more technology involved, as the infrastructure became more complex, there was an increasing number of fees and charges imposed, and a lot of these fees and charges, in fact, did eat away at the interest. So the banks did a sort of a deal where instead of charging you fees and charges for using certain services, like in fact even having a bank account, they basically gave you no interest at all. So many people would have thought, okay, well, I'm not making any interest on my money, but at least I don't have to pay for all these fees and charges, and so I'm ahead anyway. And this was particularly the case for people who didn't have a lot of money in the first place. I've noticed that an increasing number of voices in the area of bank bail-ins have been arguing, and I might even say scaring people into believing that your money isn't safe in the bank. I believe that's not true. And the difference between myself and a lot of these people, I believe, is that I'm a strategic thinker and these people aren't. I know 100% that I'm a strategic thinker. You need to be a strategic thinker if you want to be successful in business. Business always throws certain challenges at you, and so you need to be able to work out ways to overcome these challenges and take advantage of an environment which everybody faces. So those who are able to take advantage of the environment more favorably than others become more successful than others, and so this is where you need to be a strategic thinker. There are many definitions of strategic thinking, but the one that I like incorporates what is called a systems perspective. A systems perspective requires the thinker to take into consideration various elements and how these various elements impact on a particular situation, circumstance, or a dilemma. Now, one of the main arguments for bank bail-ins is that, well, it happened in Cyprus. Bank depositors who had their money in one or a couple of the banks which were actually bailed in either lost a lot of their money, or in one particular bank they lost all of their money. So, Cyprus must have been a test case. It was a small-scale test case just to see how people would react, how this would work out, and now that the economic and financial conditions around the world have deteriorated and there is more fragility in the financial sector, well, it's looking more obvious that this is going to be implemented in a wider spectrum of circumstances. In fact, an increasing number of countries have implemented legislative changes which gives them the flexibility and option to implement bank bail-ins if they believe that to be the case. So these are the main arguments. The main arguments, look, it's happened before, and also legislative changes have been implemented. So these are the clues which make it certain that that's going to happen. Personally, I find these arguments far from convincing, and certainly far from certain that Australia will have a bank bail-in should Australian banks become financially insecure. For starters, when it comes to the legislation, yes, it's true that there have been certain legislative changes implemented in Australia in early 2018. A close inspection of this legislation shows that it's far from clear in regards to using depositors' money by the bank to help the bank get out of liquidity issues. In contrast, we have a situation in terms of depositor guarantees, in other words, deposits which are guaranteed by the government. Well, in this regard, there is plenty of clarity, and this is nice and simple. Deposits are guaranteed by the Australian government in a licensed Australian bank. So we have two sides of the story here. We have one side where we have legislation which makes it far from clear whether depositors' funds can be used for bail-in purposes. On the other hand, we have a lot of clarity in regards to the fact that depositors' funds are protected, and this protection is through a government guarantee. Then we have the issue of Cyprus and the bank bail-in situation there. Well, my argument is, what about Cyprus? Number one, don't use the example of Cyprus as an indication of what's going to happen in a country such as Australia. It's like comparing apples to oranges. It's like saying, well, in North Korea they have a regime and people get exterminated by the government, or in China they do that as well and highly censor the internet. Oh, well, that's going to happen all over the world because it's happened there. Most people smart enough to recognize that the Western system is quite different to North Korea, is quite different to China, and as a result, the things that are occurring there will not occur here. It's just a different, completely different environment. Yet, they don't see the differences between a country like Cyprus and a country like Australia. Cyprus, for example, was very closely linked to Greece. Cyprus is part of the European Union. Cyprus has been restricted in a number of ways in what it was able to do, and that's part of being in the European Union. Similarly, we can apply these restrictions to countries such as Greece, such as Italy, which is now having problems. Under normal circumstances, when there is major economic problems in a country, the country's currency falls, and falls considerably, and we can see that in Turkey. And then this fall in the currency will cause exports of that particular country to become a lot more cheaper. It'll drive a lot of tourism and investment into that particular country because everything is really, really cheap. And so the countries with such deterioration in currencies have actually had crises which have only been fairly short-lived. Whereas what we see in Italy and what we have seen in Greece, well, that's a long-term problem. And that problem has occurred only because of the restrictions and the economic strangling that has occurred as a result of the fact that these two countries are part of the European Union. They cannot reduce their currencies. They cannot print any more of their currencies. They are bound by what they are able to do. And as a result, the pain and misery that they are in are much more inflated than what would be the case if it was another country, such as, for example, Australia. And so we wouldn't look at what happens in Greece or in Italy, and we wouldn't compare it to a country such as America or Australia, because we don't have those same restrictions. We don't have a European Central Bank that will lend us money and will impose certain economic conditions and restrictions. And that's the case with Cyprus. Now, I can't use Australia as an example of a country in its dealings with bank failures because we just don't have a history of that, in contrast to America. If you look at the chart which I'm showing you now, you will see that between 2001 and 2018, America has had over 550 bank failures. Of those, how many bail-ins were there? Exactly 0. If you look at the value of total assets of the banks which had failed, it's approaching $750 billion, yet no bail-ins. Another very important point to note in Cyprus, and I have not heard this anywhere, yet this is a very important point, and this is an example of strategic thinking. Strategic thinking requires you to take a look at the whole situation, the whole circumstance of a particular situation. And at the time of the banking crisis in Cyprus, there was a lot of sanctions placed on Russians. We see that today. We see the sanctions being placed on Iranians. We see the sanctions being placed on Russians. We see sanctions being placed on Iran as a country, on Russia as a country. Something that's very important, which is also a fact, is that a lot of Russians did have their money in Cyprus bank accounts. It was argued by the mainstream media that the reason why they did that was because Cyprus was actually a bit of a safe haven. It was a tax haven for a lot of these Russian multimillionaires, because not only did they have low taxes, but they also provided particularly high interest rates. And so one of the reasons why the bank bail-in actually was allowed to occur was because they said that this is something that is going to punish predominantly the Russian multimillionaires who are using those banks as tax havens. And so even though there is going to be pain and suffering by the depositors, a lot of those depositors, in fact most of this pain is going to be suffered by these multi-billionaires, who are usually multi-billionaires because they are part of the mafia or organized criminals or basically other sorts of scammers. So this then makes the population look at the bank bail-in situation quite differently. Obviously, I'm not talking about the other customers, the actual Cypriots who lost money, but for the general public, when we were looking at it, we were probably thinking, oh yeah, well that's why they deserve to lose money, smart asses, they were trying to beat the system, blah, 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 blah. They were the scapegoat. Now this is very, very important. And so the government was allowed to get away with this because there wasn't such a major backlash, because after all, the people who were really going to get hurt were going to be these Russian criminals, these Russian scammers who deserved to be punished anyway. That's not the case here in Australia. I agree that the financial system in Australia is going to have a problem. I agree with that. I agree that the banks will not have enough capital to be able to allow themselves to operate competitively. I accept that. I agree that the banks may need some form of assistance. A bail-in is one of those options, but it's not an option that will be used. Many reasons why. Firstly, let's have a look at the key stakeholders. Number one, the government. The government is a key stakeholder because the government is the party that would allow that to happen. Banks just can't do it because they want to do it. It would be as a result of government intervention through policy, through legislation. The second stakeholder is the bank themselves. Obviously, they are a key stakeholder because they are in the center of this situation. Then we have the other stakeholders, which are going to be the depositors, the customers of the bank. They may not even be depositors. They'll be the customers of the bank. Obviously, it'll predominantly be depositors because they're the ones that would lose their dough should a bank bail-in occur. So let's have a look at the implications of a bank bail-in for each of these three stakeholders. Now, the government would be totally screwed. Whatever government is in power, Labour, Liberal, Party X, any party that would allow that to happen would be committing political suicide. We only have 4 banks in Australia, 4 major banks. So if one of those banks was to be bailed in, just on average, that would be 1/4 of the population. I mean, roughly, look, I don't know the exact numbers, but look, roughly, just for argument's sake, 1/4 of the population would be burnt through no fault of their own at all, which means all of these depositors who would have got burnt would be really, really pissed off. No amount of explanation, no amount of arguments, no amount of convincing would actually change their mind. Because as a depositor, as a bank depositor, there really is no excuse for you to lose your money. It's just, at least, look, if you get a fine for parking in the wrong place, for driving too fast, you're not going to get a lot of sympathizers. Someone will say, oh look, you were driving like an idiot, cop the fine. So you might be arguing, but as you can see, not a lot of revolutions here, and you don't get too many overturned governments because of speeding fines or parking fines or drink driving fines or charges. I mean, you just got to cop it sweet. But in this case, if you deposited money in the bank, you have done nothing wrong. You're an innocent party. an innocent party who would lose a portion of their money should a bank be bailed in, whether it be $500, $1,000, $2,000, $5,000, whatever. The government would get no sympathizers. That's number one. Number two, the bank themselves, gone. That would be such a tarnish to the bank's reputation. Within a generation, I don't think the bank would be able to clear its name. I think that bank, it would be all over. The third key stakeholder. We'll play the pretending game, and let's pretend that the ANZ bank gets bailed in. And you are a customer of the Commonwealth Bank or Westpac, whatever. So picture this. On the news, ANZ gets bailed in, ATMs locked. It seems ANZ bank depositors will lose between 20 and 30% of their deposits. Okay, Mr. Customer of the Commonwealth Bank or Westpac, what are you going to do? Remember, place yourself in the context of circumstances at the time. Markets are falling, housing is falling, unemployment's rising, there are rumours about bank bail-ins, people are getting scared, there's tension on the streets, a lot of people are suffering economically, and then bang, you get this message on the news. ANZ is bailed in, ATMs locked up, bank branches operating limited hours, security guards standing at the doors. What are you going to do? Could it be that you're going to go to your bank and you're going to start withdrawing all your money from whatever bank it may be? That's what I'd do if I wouldn't have done that already. And probably everybody else would. So that would then cause all of the banks in Australia, and there aren't that many of them, to pretty much become insolvent overnight. Which means they will all need to be bailed out. There's a whole total economic collapse. But that's not all. I specifically said ANZ, although I could have said Westpac, but I specifically said ANZ because ANZ is also a New Zealand bank. In fact, ANZ, if my research has been done correctly, is the largest bank in New Zealand. Now, New Zealand and Australia, we're effectively very closely related brothers and sisters. So if the ANZ gets bailed in here, and if Australia has economic problems, then so would New Zealand. There would be a lot of information flow to and fro between each of these countries. So straight away, New Zealand banks would then be hijacked by depositors and people wanting their money back. So it'd be a run in the banks in New Zealand. Obviously, ANZ would be the main one. Westpac would be another one. So even if Westpac gets bailed in here, then there is a Westpac in New Zealand. So straight away, people would be running for their money there. There'd be a spiral, will continue. And that would then flow on to ANZ, and that would flow on to all the other New Zealand banks there. It would be a free-for-all. It would be hell on earth. So it would be an insolvency for all of the Australian banks, all of the New Zealand banks. Remember, this is a direct consequence of a bail-in of one bank here in Australia. Who are the winners? Well, no one. The governments get lynched. The banks are pretty much gone, all of them. And obviously, you've got a very, very angry population with most people now being burnt in one way or another because the whole financial system has collapsed. All the banks are pretty much closed because they're all insolvent. It's just game over. It's just, forget it. It's just not going to happen. I mean, as you can see, if you've got two moving brain cells, hopefully my argument makes a lot of sense, because my argument is very practical, it's very realistic. Because I'm assuming that if you hear that a bank bail-in is occurring at the ANZ, that you will quickly start to withdraw your money from whichever bank you're in. I think I'm pretty safe in making that assumption that that's just what's going to happen, that people will start withdrawing their money. Because if I'm wrong, all of these consequences I'm talking about are not going to happen. So that means that if ANZ gets bailed in, well, that means that everybody else is thinking, oh, well, bad luck ANZ, well, lucky I'm with Westpac, well, I'm just going to, keep all my money in there. I don't think that's going to happen. So you might be thinking, all right then, so what's all this bail-in stuff about? What is it with these legislation changes? Why are people speculating about this and so forth? Well, this is where my kickboxing training and my kickboxing experience comes into it. Let me introduce to you a fake. A fake is a tactic that is used in contact sports such as boxing or kickboxing, and probably maybe in some other sports as well. Look, I don't know, but I certainly do know that it's something that I did learn as part of my kickboxing training. What a fake is, it's like a pretend move, it's a pretend action which is meant to take your opponent's attention off your intended move and to sucker them in with your fake or your false move. Let me give you an example, a visual example. As you can see in the first example, what the kickboxer did, he basically used his right hand and he provided two fake punches. Now, they were real punches because they actually did strike the opponent, but they were nothing more than fairy slaps. But what that did was that actually took the opponent's attention away from the intended blow, which is the left elbow to the head, which ultimately knocked him out. So initially we had those two fairy slaps, which were examples of the fake punches, that then took the opponent's attention away from the left hand, the left arm. Both of his gloves were used to protect himself from the fake punches, and that left his right hand side exposed, and then whack went the left elbow, and that was the intended punch. Bingo, knockout. In the second example, same deal, a couple more fake moves which then took the opponent's attention away from the intended kick. That left his right hand side exposed, which allowed the aggressor to give him a roundhouse to the head. Bang, knockout. As far as I'm concerned, the bail-in rumours are actually nothing but a fake. The bail-in rumours are actually there to take people's attentions away from the real intentions of the banks and the government. Now that we're about 20 minutes into the podcast, I can't say for sure what is going to happen because I can't predict the future. But thinking strategically, it looks to me like the bail-ins will not happen. In fact, the bail-ins or the bail-in rumours are just making those people who have money in the bank a little nervous. And these are the people who are going to be most sensitive when it comes to potential liquidity problem. But I think the real knockout is going to be to those people who have numerous investment loans with the bank. And I think this is going to be the knockout blow. And these people who would least expect it are the ones that are going to be knocked out for a number of reasons. But before I get into those reasons, I would like to show you how one very successful investor got knocked out by his bank.
It's no secret the big banks can be ruthless when they want their money back. But this story reveals a new low in their breathtaking arrogance. Roy's business was so prosperous, the Commonwealth Bank threw money at him and encouraged him to expand. In return, he always paid them back on time.
So to cut a long story short, we have a situation of an entrepreneur and businessman who was given a credit facility of over $160 million by the Commonwealth Bank. In fact, they kept on increasing his credit facility. And then when we had the economic crisis in 2008 and things were significantly deteriorating, particularly in housing, the Commonwealth Bank gave him 8 months to repay half of his credit facility. In other words, to bring it down to a limit of $80 million. Now, when you've got your money invested in assets and equipment and plan, because you do not expect that you're going to have to give tens of millions of dollars back within less than a year, then clearly he was not in a position to reduce his credit facility without actually selling off many of his organization's assets. So we have a bloke who had a thriving business which took over 30 years to build up, and that was pretty much destroyed. I'm not going to say overnight, but within a year it was destroyed because the bank actually requested $80 million to be repaid back within a 10-month period. It is this type of move which I believe is going to be the knockout move for the banks. I believe there will not be any bail-ins. In fact, what I believe the banks will do are going to audit their lending portfolio. They will see who owes them how much money, and they are going to go after the large-scale investors who they believe are going to be at the highest risk of potential default, and they will be wanting their money back very, very quickly. You know, and I know that there are many people who've invested a lot of money in multiple properties. These are called, well, property investors. They have 3, 4, 5, 10, 20, 50, 100 different properties. And we also know through, well, not just through the media, through our own research, but as well as listening to this podcast, the property is going to be hit very, very hard. So I believe that very quietly banks are going to be writing letters, and they'll be writing letters to these investors and basically saying that, look, you have a credit facility with us of, say, 10 million or 15 million or 20 million, whatever it may be, dollars, and we believe that there is a significant risk of default, and so to bring back our exposure, we would like you to repay some of your credit facility within whatever 6-month period, within a 1-year period. Now, very quietly, very strategically, these will be letters sent out to individual investors. Now, these investors may feel it's fair, may feel it's unfair, whatever, but this is going to be the most strategic thing that can be done. The government is obviously going to be washing its hands, nothing to do with the government. The banks are obviously going to have a little bit of a revolt on a minor scale from these individual investors. And I mean, I can see the consequences of this. You're going to have situations, well, like we saw in this clip I played, you're going to have interviews on a current affair, Today Tonight, 60 Minutes, about these property investors saying how they got burnt, they got stung, you know, the banks have screwed them, and how they have to repay their loan. That's not possible, it's not ethical in such a short amount of time, it's unexpected, blah, 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 blah. The banks will then send their representatives to face the media, and then they will turn this into a beautiful public relations exercise. And I mean, look, I should even be a script writer myself for these situations, because I can see exactly what would be said. The banking spokesman will say, look, yes, it is true that we have had to reduce the credit facility of this particular individual. Unfortunately, this had to be done, but we have a responsibility to our stakeholders, we have a responsibility to our shareholders, to our customers. We need to be operating conservatively, and we need to reduce our exposures, and we believe that having 30 or 40 properties and owing us $15 million is a little bit too risky, so we believe that it's more appropriate to scale back some of these loans instead of, say, and then they might even talk about the bail-in, instead of having to bail in our customers, as was the case in Cyprus, for example. So, as you can see, business crew, there is a lot of evidence which I think I have argued quite strongly to show that bail-ins are just not realistic, they're not feasible. The government would certainly not want to be the one being responsible for allowing them to happen. The banks certainly have no interest in them occurring. On the other hand, you can do a strategic move such as very discreetly, very quietly write letters and call in some multi-million dollar loans. That's the other thing. In the example of the clip that I gave you about the guy who had a $160 million credit facility, now the Commonwealth Bank wanted him to repay back $80 million of that, and eventually he did repay the $80 million back at the expense of his whole business. But you can imagine how many individual depositors would now need to get a haircut in order for the bank to be able to claw back $80 million. Because when we give haircuts to depositors, well, in Australia, not everybody has millions of dollars just sitting idly in their deposit account. You might have individuals with 10,000, 15, 20, 50, 100,000. Now, probably they're not going to be losing all that money. They might lose a small percentage of that money. So, on the one hand, we have one investor who has provided the bank $80 million. The other option, the bail-in option, would probably mean that you would be burning, instead of one individual, you would be burning maybe 10,000 individuals. So you don't have to be a mathematician to work out which is the most probable and most logical way of approaching the situation. Now, imagine you as the third stakeholder, because we've already mentioned the bank, we've already mentioned the government in this case, and you as the other stakeholder. Now, you are going to be watching a current affair today, tonight, or 60 Minutes, and then you're going to have the banking spokesman saying, look, yes, we believe that in this financial crisis that we are in at the moment, in this housing crisis, it would be unethical of us as a bank to allow this individual to have a $30 million lending facility on his 80 houses which he owns, so we needed to claw back some of that. And obviously you're going to have this borrower and this investor being obviously pissed off and crying and angry and abusive. How would you, as the individual looking at that, how would you react? Would you have any sympathy for him, or would you think, well, bloody hell, 80 houses, I can't even afford one, or I'm renting, or there are people who have not been able to afford even one house because of inflated prices, because of investors such as yourself, because you have been hoarding all these houses, and finally the tables have turned and finally you've been burnt. Well, you're not going to get any sympathy from me, and I believe that individual is not going to get a lot of sympathy from many people at all. In fact, you might be looking very positively at the bank, thinking of the bank as being a protector of your funds, particularly when the bank would be saying, well, look, what other option do we have? Do we go in the bail-in way? And I don't think that we certainly would want that, and you would obviously agree with that. So that is it. Have a think about this, and please share this. I have listened to a number of bail-in arguments and podcasts and clips on this issue, and what I'm presenting, as you probably realize now, is something completely fresh, something completely different. And if this is a topic that's of importance to you, and you'll probably be discussing it with your family and friends and acquaintances and workmates, most probably you'll be facing some pretty fierce opposition saying, oh no, the bail-ins, that's what's going to happen, bail-ins is the way to go because of Cyprus, because of these other one or two little very flimsy arguments which they're going to give you. Send them a link to this podcast, and hopefully, if they have half a brain, they will be convinced by these arguments, because these arguments are, I think, very, very strong, and there are many arguments that I've presented. And if they're still not convinced by what I'm saying, well, they're probably too dumb for you to even hang with. So either way, definitely worth hearing this. And also, just to finish up, I would like to make one point. As a contingency, and entrepreneurs and businessmen always should have contingencies, even though I am 99% certain that Australia is not going to be facing any bail-ins because of what I have said. If you do not want to take that 1% risk, and for example, if you do have money in the bank, maybe tens of thousands of dollars in the bank, then if the situation does deteriorate, and certainly bail-ins aren't going to be implemented overnight, there are going to be economic and financial signals along the way, and rumours will be spreading and so forth, then there will certainly be plenty of time to take your money out. If you do not want to have too much money in the bank, a good idea is to withdraw your money, but not to have it in your home, because that's another risk in case you get burgled. And I do believe that if economic and financial situations deteriorate, there will be an increasing level of crime and burglaries and break-ins. Consider repaying off your personal loans, your car, and if you're renting, consider speaking to your landlord and saying, mate, I want to do a deal with you. I want you to freeze my rent for the next 2 or 3 years, or perhaps even reduce it, because I will pay my rent up front for 1 year, or maybe for 2 years. This is an expense which you're going to incur anyway. Probably you're getting stuff or interest in the bank anyway, so it's not that you're going to be forfeiting a lot of interest which you could be accruing. Take your money out, pay your rent for the next year or 2 years up front, so you're basically going to be living, well literally, rent-free for the next couple of years. That's going to be one expense that you're going to have out of the way. Or perhaps repay off your car loan if you've got a loan, or prepay your gas or electricity or water, once again for a year or for 2 years or for 3 years. So what you're effectively doing is you're actually taking some money out of your bank, so you don't have too much money in the bank. You're paying for things which you will need to pay anyway. So these are expenses that you actually don't have to worry about, and you're reducing the amount of money you've got in your bank. And so even if there is a 1% chance of a bank bail-in, there is going to be considerably less money in the bank for the bail-in to get their hands on, and you will be well paid up in many of your expenses. So to conclude, who is going to be getting the final knockout during a banking crisis? Will it be the individual depositor, or will it be the large-scale borrower? My money is on the large-scale borrower.